Open any chart and a pro trader reaches a clear buy, sell or skip in under a minute. But most traders stare for 20 plus minutes and still close the laptop with nothing decided. I read trading charts around a job for 7 years thinking that it meant I'll find the perfect entry candle. That belief was the thing keeping me lost, but the fix was the order I looked in. So I'll give you the 3 questions a pro trader asks on any chart in order to reach a clear yes or no. A fresh trading chart loads and your eyes jump straight to the newest candle, hunting for a signal. Peter Brandt has traded commodities for over 40 years off almost empty charts. The first thing he does on any market is pull back to the weekly and ask one thing: which way is this actually going? Only then does he look closer, because the candle everyone obsesses over is the last thing he checks. You do it backwards, starting at the candle and reasoning outward. And that's why 2 charts that look the same can leave you frozen. So question 1 is direction, and you read it on a higher time frame before you look at anything else. On stocks, cryptos or commodities, drop a fast and a slow moving average onto the weekly time frame, keeping the slow one somewhere around 20 to 30. You call the trend up only while the fast one holds above the slow one for about 3 weeks, and down while it holds below. On a currency, you don't even need the moving averages. You need the structure instead. The trend is up while price keeps breaking and closing above its last few swing highs, and it only flips down once price decisively breaks and closes below the lows. So take a pound-dollar chart. Price has been rolling over every bounce lower than the last, and it has broken and closed below its recent lows. So before I draw a single other thing, direction is down. Notice I have not looked at one candle pattern yet. This is the start of what I call the signal last read. 3 questions in a fixed order where the entry signal, the thing you reach for first, is the thing you check last. I don't open a chart hunting for the perfect candle. I read which way it's going first, because price is the only thing that ever pays. So you've got direction, and this is the moment most people think they are ready to click. But direction on its own will walk you straight into a loss, because knowing which way a chart is going tells you nothing about where to actually act. 2 traders pull up the very same trading chart. One sees a clean buy signal and takes it, and the other sees the identical candle and skips. And the one who skips is the one who gets paid. The reason has nothing to do with the candle, and a chess study from the 1940s explains it better than any trading book. A Dutch researcher named Adrian de Groot spent years studying how chess masters actually think. Everyone assumed the answer was obvious, that masters win by calculating far more moves ahead, seeing 20 deep where a weak player sees only 3. So he tested it. He flashed a real game position in front of masters and club players for a few seconds, took it away and asked them to rebuild the board. The masters rebuilt it almost perfectly. The weaker players could not get close, but when he measured how far ahead each of them were calculating, the masters were not looking any deeper than the rest. They were reading the structure of the whole board first, where the pressure sat, and once they saw that, the right move was almost obvious. The move came last, and it came easy. You see it grinding over one trading candle, trying to force a decision out of a single bar, while the shape of the whole trading chart, the thing that would make the call easy, is the one thing you never actually looked at. So question 2 is location, and it kills most of what you attempted to trade. A signal only counts if it's sitting at a major level, and a major level is one of the few obvious lines where price has clearly turned at. And that is more than once, with a real move each time. Out of the dozens of small lines you could draw, only 3 or 4 that are impossible to miss actually count. Run what I call the address test on every signal. Does this signal have an address? A major level it's touching right now? Or is it floating in the empty space between levels? Because that space is just noise. Back to that pound-dollar chart. Price is in the downtrend and it has rallied straight back up into an old ceiling it was rejected from twice before, with a sharp drop each time. That ceiling is a real address and price is touching it right now. So question 2 passes. A trading candle without an address is just noise. So now you've got direction and location, 2 of the 3. And only now do you reach the part you started with, the entry signal. Except this is exactly where the textbook gets you, because the most perfect looking trading candle you'll ever see can show up screaming at you to click. And if it's in the wrong place, a pro trader deletes it without a thought. You can read the trend right, find a real level, and take the cleanest signal of your week and still lose. All because you ran those 3 checks in the wrong order. It's September 2018. I was looking at Euro-Yen on the 4-hour chart, and there it was, a textbook bearish pin bar, sitting right at resistance. Long wick, clean rejection, exactly the candle I had trained myself to wait for. And I got that little hit of certainty. This is the one. So I sold it. What I didn't do was take one step back, because up on the daily chart, the time frame that actually carried weight, price had just closed strong and pushing up through that same level. The big picture was pointing up, and I had sold straight into it on the strength of one beautiful trading candle on a lower time frame. I remember staring at the loss afterwards, thinking, but the signal was perfect, and it was. That was the whole problem. I had let the last and smallest question, is there a nice candle, overrule the first and biggest one. Which way is this market actually going? And if you have done something like that, it's not a disciplined flow. Nobody ever handed you the order to read in. These reading mistakes just show up a little differently for everyone. And the free 3-minute quiz in the description below pins down which one is costing you the most. Get your diagnosis today with the link below. So question 3, and only now, is the signal. A valid signal does 3 things at once. It lines up with the direction from question 1, it forms right at the level from question 2, and the candle itself is smaller than the recent daily range, so that you know it's a genuine turn, not one that is exhausted or an oversized bar. On currencies, that is usually a pin bar, a tail bar, or an inside bar, or a false break. On stocks, crypto, and commodities, it's patterns like the 3 white soldiers or an inside bar. Out of all of those, you only need one in the right place and in the right direction. And this is the rule the whole analysis stands on, what I call the location veto. If question 1 or question 2 fails, the signal is dead on arrival, however perfect it looks. Direction and location veto the candle, and the candle never vetoes them. The entry signal is the one thing almost every course online sells you as the secret, and it's the last and smallest question on the chart. Back to the pound-dollar trade. Direction is down, price is at that ceiling, and a bearish pin bar forms right on it, smaller than the recent range. All 3 agree, so I sell just under the candle. My stop loss goes just above the level, for example 100 pips, and my target sits twice that away, around 200, before the next level. Now the rejection. Take that exact same clear pin bar floating halfway between levels in the empty space, a textbook candle, but no address. I don't touch it, and the veto kills it in a second. And at 2-to-1 target, 1 winner covers 2 losses. So you can be wrong more often than you are right and still come out ahead. That's the trader worth becoming. The one who runs 3 questions in order and reaches a clear yes or no in under a minute. instead of freezing over a chart at 11 at night with a dozen indicators screaming different things. So tonight, open one chart and run them in that order on the first trade setup you find. But the whole analysis lives or dies on that second question. Every check after direction leans on you drawing the one level that actually matters. And the wrong line breaks the other two. So watch this next, where I show you exactly how to find that one level on any chart that is worth trading from. See you in that video.